Oh, what has been going on with Polkadot? What was once one of our most optimistic cryptocurrencies has also been caught in its own downward pullback. But that doesn't necessarily mean that we're going to have a lot more to go. We may actually be in pretty good shape for Polkadot. We are actually in the middle of a small counter rally at this moment. I have this zoomed up on our 30-minute view on our linear chart, and we bottomed on January 24th, which coincides with the bottom of a lot of the other cryptos. Some of the cryptos actually bottomed on the 22nd. Regardless of that, we are in a bounce, but it doesn't look like a five-wave bounce that we are seeing in some of the cryptos, such as Solana, where you have a five-wave bounce. Even in that case, five-wave leading diagonals are not the cleanest structure. You can't trust them. And Bitcoin and Ethereum are showing more of a three-wave kind of pattern. As a matter of fact, when we look at Ethereum here, we have a clear A, B, and then what looks like an ending diagonal for our red-pink C wave. It fell right into the target box. So we may have some exciting action into the overnight hours, into the market open hours tomorrow morning, Monday morning, my time. So we're going to see what happens. It does look like it's waiting for something. Whether it's going to punch through or keel right back over is yet to be seen. And Polkadot stands in a similar posture at this moment. So we are falling within these channel trend lines, but this doesn't look like a five waves up. You could count 1, 2, maybe 3, maybe there'd be a 4 and a 5 up. But just from the shapes, just a bunch of zigzags, it's just ugly and corrective looking at best. So that's what we have on the short-term picture. My lean is that we're going to go a bit lower. How much lower is the next question, which we're going to look at on the big long-term picture. So this is the logarithmic chart for Polkadot, and I will have a link to this posted in the description below, so feel free to check that out. But the structures haven't really changed much since our last update, which wasn't that long ago. When we look at this, I do have two motive patterns in operation at the moment, and I am leaning towards red as my primary just because it would align better with some of the other cryptos. Red has this whole rally as a B wave fake out rally, like a bull trap, whatever you want to call it, and that aligns pretty well with Ethereum and Bitcoin. In other cryptos like Bitcoin Cash and EOS, we invalidated that. We validated the upside setup relatively quickly. So those have reset. Polkadot is one of those cryptos like Ethereum and Bitcoin, which we didn't make a lower low compared to our midsummer low, which I am considering the bottom of our A wave, but there is still a possibility that that was the major pullback for our wave 2, and that we're not going to hit that low again. Regardless of which way we're going, the red has us going possibly down to that low again. Technically, if I were to follow our standard retrace patterns, anything like that, we went deep enough on our A wave. I think that was a 61.8% retrace back in summer. So typically, if you have your A wave go really deep at first, it's a very strong indication that you're going to have a flat correction, which is what the red pattern is. It says that we're going to go down to about that level again to complete our red C wave. So that would put us around 1056. So about a 50% downside potential from where we are at the moment, maybe a bit more than that. The green pattern does hang on though. So I have written here, I have it clarified. It may be a little confusing at first, but the green pattern does have this as a nested 1-2. So lower degree wave 1, followed by a lower degree wave 2. And they do have the look and the shape, looks like 3-4, a 4-5, and then an A, B, C with potentially a little lower to go in our C wave. The reason I think that is because when we look at the internal structure of this thing, looks like you could count this as a 1-2, maybe a 3, or 1, 2, 3, 4, 5, especially if it's a ending diagonal type of thing. You see the zigzag thing going on here. If that is the case, our green wave 2 may actually fall here, would not fall as deep as the red. So we would fall somewhere around the $15 mark, maybe a bit lower. The way this projects, we may be finding ourselves right around the $14 mark. So we have some downside room below us to fall a bit lower in the green. However, I have this, I did take note on the chart. 1516 is a support, and that would be the 76.4% retrace of this wave 1 here. So typically, when you break that, there's a very good chance that you're going to go lower. It doesn't bode well for an impulsive pattern. So we haven't broken that yet, even though we came very close on January 24th. So we're going to see what happens. We may poke a little before below that before turning back around. The way I'm playing this is I look at the crypto sector as a whole. So if we see a lot of downside left over in some of the other major cryptos like Bitcoin and Ethereum, it may be indicative of us going a bit lower. The truth is, if we break down below 1516, there isn't much of a difference, practically speaking, between green and red because it's not too much further down for the red pattern to come to fruition. And honestly, I would prefer that we just go all the way down, just rip that bandit off now. That way, you get all this bearish sentiment out of the way. You have a very clear nested 1-2-1-2 setup. And what comes after a second wave? The third wave. Why is that a big deal? The third wave is the strongest and fastest wave in Elliott wave theory. And the best part here is that it is a nested 1-2-1-2. So we already started the big third wave from here. And having a 1-2 out of the way gives us a very, very bullish upside setup. A lot of the overhead projections would still hold. I'm talking about if we can bounce back 150 plus, if we're looking at a standard third wave target, $150 to $300 would be your targets. That's what that green box represents. So again, we have a lot of upside overhead. We don't have as much downside. If we do pull back a little bit more, think about it this way. Again, it's going to be a better sale price to get a discount. We're going to have a much more complete looking pattern. You can be more convinced that that is the bottom of the major wave 2, and that we have a lot of upside left. So I'll be putting a lot of videos out on how to allocate your cryptos, because Polkadot, as you all know, has a very short history, like some of our other altcoins. Very high risk. You can't depend on this pattern as well as you can in something like a Dash or a Litecoin or Bitcoin. So always diversify. If you like one speculative crypto, buy a bunch, buy all the altcoins. Don't fall in love with one, because you never know which one's going to outperform. I learned my lesson the hard way. I bought a lot of cryptos. A lot of them did not work out during this crash, but Polygon single-handedly kept my portfolio afloat even when the crash started. So don't forget, Polkadot might be the one that saves us. You never know. So don't forget to subscribe. And if you enjoyed my video, don't forget to give me a like. Until next time, thank you for watching and happy trading.